Back in 2005, Michael Burry bought his first credit default swaps in anticipation of the housing crisis. He had predicted the same earlier on with little to no support, but then it happened and Michael benefited vastly from it. Burry notably bet against mortgage-backed securities during the mid-2000s housing bubble. He comprehended that they were being priced as extremely safe despite being linked to mortgages at high risk of default. Looking at the numbers, he understood that people were given homes they could not afford and were allowed to take out second and third loans if they defaulted. It was just a matter of time. The market was going to adjust, and when it did, the housing market had no liquidity to service that debt. He could not have known when exactly this was going to happen, but it was obvious to him that it was going to happen, and it did. Then again in 2008, he predicted a crash and was again proven right. And now he's back again with another harrowing prediction. Is history repeating itself? Stay with me till the end if you want to know why Burry is so certain about a crash and if it's time to start worrying. A little about the man himself. Dr. Michael J. Burry is the founder of Scion Asset Management and the guy who called the 2008 subprime crisis. He also inspired the book and film The Big Short, which was about how he successfully predicted the 2008 great financial crisis. And now he has issued a dire warning about the state of the stock market. Burry is one of the most massive bears on the American economy, and he has forecasted another market crash in 2022, this time of even greater proportions. He warns that the stock market speculation has reached levels not seen since the 1929 crash, and assets are more overvalued than before the dot-com bubble burst. By the way, are you enjoying this video? Then give it a like and hit the subscribe button. It really helps me grow the channel and bring you the best content about investing. Predicting an imminent collapse, Burry singles out Tesla, GameStop, Bitcoin, Dogecoin, Robinhood, and the white-hot US housing market as illustrations of theoretical excesses in financial markets. He made a bet last year against Tesla stock and one of its best-known holders, Cathie Wood's ARK Revolution Fund. The Scion chief diagnosed the biggest speculative bubble ever in all things in June 2021. He cautioned that retail investors were hoarding meme stocks and cryptocurrencies before the mother of all crashes. In February of 2021, he first warned of high inflation. Though contrarian at the time, he was eventually proven right. Inflation is skyrocketing yet again. To him, it was all too obvious, as he later commented, "As I said about 2008, it is like watching a plane crash." This was in late May, as the stock stumbled. But why is the upcoming crash worse than what we've seen before? Looking at some of his past tweets, it's clear that Burry has long been cautioning that a market crash was on its way. Burry also warned that the US dollar is far weaker than it seems because inflation is wearing away its buying power. We all see it every single day in the prices of everything, he said. According to an old tweet Burry posted in March, which he later deleted, the Scion Asset Management manager believes that the S&P 500 recovered too quickly and disproportionately from the COVID-19 crash in 2020 compared to other market crashes. As such, Burry predicts a drop of more than 50% for the next few years. By the way, this is no ordinary man talking. Michael Burry's forecasts have considerable power to impact sentiment in the market, particularly among retail investors. His track record for predicting market crashes is respectable, so any remarks coming from him are always highly regarded. And there's a lesson from history. He backed up what he was saying by presenting PE ratios, which are stock prices divided by the earnings, as in how much the company is making. And back in 1929, before the big historic crash, PE ratio was 30. The current S&P 500 10-year PE ratio is 29.5. Burry noted that the US stocks are heavily overvalued and primed to tumble. Moreover, he noticed that Americans are saving less, borrowing more, and burning through the cash they stashed during the pandemic. In short, savings are covering less and less of the American GDP, as he put in one of his tweets. He argues that the US economy is on borrowed time as a result. Consumer spending will plummet, and the US economy could enter a slump once household savings run out, hammering corporate profits and economic growth. And this is not all speculation. The effects are visible even now. With increasing inflation, consumers have less money to spend. And one example of how this affects businesses is the performance of Amazon. Amazon's first quarter results show that its revenue grew only by 7%, which is merely a fraction of the 44% growth seen last year. According to his analysis, the stock market speculation has reached levels not seen since before the 1929 crash, and assets are more overvalued than before the dot-com bubble burst. He also worries that geopolitical and economic strife exceeds that seen in the 1970s. And in the face of an impending economic calamity, government regulators such as the Securities and Exchange Commission and the Federal Reserve are doing nothing. This time, Michael Burry predicts the situation will be worse than in the past. He believes that the confluence of damaging factors for the economy has reached a higher peak in 2021 than any other crisis. Over the last 25 years, he believes there is a circling trend. The bottom of a market crash is usually lower than the one that came before it by about 10 to 15. He summed up his worries in a tweet, saying more speculation than the 1920s, more overvaluation than in the 1990s, more geopolitical and economic strife than in the 1970s. He even shared a chart showing the US personal savings had plunged from over 25% of GDP in spring 2021 to about 3.8% today, and were on course to hit a record low. When criticised for his predictions in face of meagre financial recoveries post-COVID, he bluntly proclaimed that even during the worst times, it's common to see short-term recoveries in a long-term downward trend. The threat has not subsided, it has just aroused. Retail investors and promoters have fanned hype around stocks such as Tesla and GameStop, and tokens like Bitcoin and Dogecoin. They have gone as far as to declare that their prices are headed to the moon. Burry cautions that in this backdrop, inflation will climb higher, squeezing consumers and weighing on asset prices and economic growth. Tesla's CEO Elon Musk, Rich Dad Poor Dad author Robert Kiyosaki, and Goldman Sachs senior chairman Lloyd Blankfein have lately cautioned about the same thing. The crypto market has been trending down for a prolonged period, with signs of retrieval looking faint. His Twitter fanbase agrees that the numbers don't lie, and the US economy looks as bad as Burry said. The patterns, according to him, are repeating themselves, as was the case with the dot-com bubble, the housing crisis, and the 1929 crash. His predictions are based on the study of these patterns, which seem to repeat themselves after years. The writing on the wall is for all to read, but is a crash really that imminent? To add some balance to the discussion, it's important to remember that he's still assuming new positions, so the collapse might not be as inevitable as he likes to put it, and there's no way to predict when it will happen. But Burry and his followers are convinced. His conclusions are based on what he deems is a repetition of patterns seen before in association with the 1929 crash, housing crisis, and dot-com bubble crash. He has predicted similar crises in the past and even benefited from them. At least the man deserves a keen audience. Also, a fun fact, Burry's display name on Twitter is Cassandra BC, an indication of a Trojan priest from Greek mythology who was cursed to give prophecies but never believed. Warren Buffett described him as Cassandra for correctly forecasting and then profiting from the collapse of the housing bubble in the mid-2000s. What do you think? Is Michael Burry right about the coming collapse? Write inflation in the comment section below if you agree with his position. If you learned something new from today's video, click the subscribe button and hit the bell icon to be the first to see my next video. I make deep dives like this every week where I uncover the secrets of money and business. Stay tuned for the next upload.